Now you can do something useful with your home micro. I mean, that phrase, that was the absolute holy grail of personal computing in the mid-'80s, wasn't it?
Oh, completely. It was the promise sold to everyone who bought an Amstrad CPC or a Sinclair QL.
Right. You shelled out all this money, and you desperately wanted to tell yourself it was for more than just playing Elite. You wanted a real, serious business tool.
And that desire, it created this huge problem. The market just got flooded with what one reviewer called appalling pieces of serious home computer software.
Huh. I can just picture it.
Yeah, they promised the world, but what you got was buggy, unusable code. It didn't give you insights. It just gave you, well, information paralysis. You ended up with a very expensive digital paperweight.
Exactly. The promise was massive, but the execution almost always fell flat.
Yeah.
And that led to this deep-seated skepticism about any business software for a home machine.
Which is why today's deep dive is so interesting. We're looking at the exception, the one that actually worked.
We are going back to 1985 to look at a package called Entrepreneur. It was a small business modeling tool from a company called Triptych Software.
And this thing, it wasn't just another spreadsheet program with a fancy name. It was, well, it was more like an enforced curriculum.
That's a good way to put it. So our mission today is to really dissect how this software on these relatively cheap home computers gave people a genuine shortcut to professional-level business planning.
And for you, listening now, the lesson here is profound. It shows that real business viability doesn't come from some magic algorithm. It comes from the intellectual rigor that this software forced you to adopt before you even hit the enter key.
And the value here is just, it's almost shocking. We're talking about a piece of software that cost, what, £15 in 1985?
Yeah, that's 60 quid in today's money. Peanuts, really.
For what was basically a college-level course in accounting fundamentals. It didn't just crunch your numbers. It gave you the mandatory intellectual groundwork that you'd normally pay a fortune for in professional courses.
Yeah.
It was democratized rigor.
It really was.
Okay, let's unpack how Triptych Software actually pulled this off. This wasn't a one-hit wonder for them, was it? Entrepreneur was part of a bigger suite.
That's right. They released 4 packages, all aimed at the serious as home user. There was Project Planner, Decision Maker, Star Watcher, and of course, Entrepreneur.
So they clearly saw a market beyond just games. They knew people wanted tools for prediction, for management, for organization.
And the platforms they targeted were key. The review we're looking at was done on an Amstrad CPC 6128, the one with the new disk drive.
Which was a big step up from cassette tapes.
Oh, a huge step up, faster, more reliable. But the genius was, they made sure it ran on a whole range of home micros. This wasn't for people with expensive, dedicated business hardware. This was for the hobbyist, the person trying to start a business out of their living room on a shoestring budget.
So let's get into the structure of it. The package is broken into 3 distinct parts, right?
Yes. You had the main program, you had the tutorial, and you had the physical paper manual. And on the Amstrad disk, they were physically separate. Side A was the tutorial. Side B was the actual application.
They were deliberately separating the learning from the doing.
Exactly. The message was clear. You have to learn the theory before you can model the reality.
And that was central to their whole philosophy, wasn't it? They'd identified this core problem with how people use software.
They had. They knew about the overwhelming temptation to rush from screen to screen. You know how it is. You hit a term you don't get, and you don't stop to learn. You just skim the manual to find the one button you need to press to move on.
Guilty as charged. We all want the result without the homework. So how on earth did they force people to slow down and actually do the homework?
This is the brilliant part. They created what I'd call an anti-rushing mechanism. It was a piece of educational engineering disguised as a software check.
Okay, I'm intrigued.
When you loaded the tutorial, it wasn't a sandbox. At certain key moments, the program would just stop, dead, and a message would pop up on screen.
Not a crash.
No, an instruction. Something like, please refer to Chapter X for instructions on how to proceed.
Wait, so it literally locked you out of the software and told you to go read a book?
Precisely. And the only way to get the tutorial to continue was to pick up the printed manual, find the right chapter, and somewhere in that text would be a code. You had to type that code back into the computer to unlock the next screen.
That's genius.
The reviewer called it clever, and it really was. It was unavoidable. You simply couldn't skip the reading if you wanted to move forward.
It's like early DRM, but for education. It turns the manual into a physical key for the digital content. You couldn't cheat it unless you, typed out the entire manual beforehand, which defeats the whole purpose.
And the manual itself absolutely justified this forced reading. It wasn't just a dry technical document. The reviewer called it a very rewarding experience. It started with real, fundamental business advice. How to structure a plan, why market analysis matters. It, and I quote, forces you to think hard about the many difficult aspects of the venture.
And that's the key, isn't it? Acknowledging that starting a business is difficult. They weren't selling a magic button for instant success. They were selling structured self-assessment.
And that comes through so clearly in this one part of the planning chapter. There's a heading, just 2 words, that says it all.
Let me guess. Have you been honest?
That's the one. The entire philosophy in 4 words.
Wow.
It forces that moment of integrity. The manual stresses that if your core assumptions, your sales forecasts, your costs are just pulled out of thin air, then everything that follows is just meaningless fantasy.
The plan is broken before you even turn the computer on.
And it ends with this brilliant piece of advice. Remember, the harder you plan, the luckier you get. That's not a software tip. That's a life maxim.
It's incredible. How did that philosophy translate into the software itself later on?
It translated into the sheer volume and detail of the data it demanded from you.
Yeah.
And the final stress test, the sensitivity analysis, which we'll get to. If you'd been dishonest with your inputs, that final report would expose your fantasy with brutal clarity. The software was an objective mirror to your own hopes.
I also love that they included other resources. The appendix with sources of assistance for the small business, that's genuinely helpful. And a recommended book list.
Yes, and the most famous title on that list definitely set a certain tone.
The Genghis Khan Guide to Business.
Exactly. It's almost a contradiction, isn't it? Here, read this deeply philosophical manual, do this rigorous accounting, and also learn how to be a ruthless conqueror.
It suggests they wanted their users to be both thinkers and fighters, planners who could analyze a balance sheet but also knew how to take a market.
An interesting combination.
So we've got the philosophy of rigor and honesty, but the big question for a 15 quid piece of software is how? How did they actually teach someone, a total novice, to balance the books?
They did it with a narrative. They created a guide, a character, to make the abstract feel tangible. They created Joe the Lobster Seller.
Joe the Lobster Seller, I love it.
Instead of just abstract terms like accounts payable, you were following Joe. You saw him buy his boat, take out a loan, hire staff, and figure out if he was making any money.
That's so smart. It humanizes the whole dry process of accounting. And Joe's story, I take it, gets progressively more complex.
It does. His transactions form the basis of the entire tutorial, which is broken down into 6 sections. Each one builds on the last, and it assumes you know absolutely nothing to begin with.
Okay, let's walk through them. What's pillar number 1?
Pillar 1 was using numbers. This is where they introduced the absolute core of all modern accounting. Double entry bookkeeping, the idea that every single transaction has 2 effects.
Which leads straight into the second pillar, I assume, the balance sheet.
It does. And the balance sheet can look like pure jargon to a newcomer, but it's where they teach the fundamental accounting equation. Assets must equal liabilities plus equity.
Right. What you own has to balance with what you owe plus what you've invested.
Exactly. And through Joe's story, it becomes practical. When Joe takes out a loan liability to buy a new refrigeration unit, an asset, the user sees both sides of the sheet change simultaneously. The sheet has to balance. It makes the concept unavoidable.
Okay, so that's the financial snapshot. What's next?
Next is making a profit. This is where you go from the snapshot to the moving picture. It introduces all the complexity, overheads, expenses, and a really crucial concept that new businesses often forget: depreciation.
Ah, the idea that your assets lose value over time.
Yes, Joe's new boat isn't going to be new forever. You have to account for that loss in value as a business expense, even though no cash is actually leaving your bank account. It's a reality check on the true cost of doing business.
And all of this builds up to a couple of key calculations, the first one being the break-even analysis.
The break-even point is the acid test. The software makes it visual. If Joe needs to sell 5,000 lobsters a month just to cover his costs, but his market research says he can only sell 3,000.
Then the business is fundamentally broken.
Right. It forces that confrontation early. This section also builds the profit and loss account, showing exactly where the money comes from and where it goes.
Then after profit, they tackle a different but equally vital issue: cash. Pillar 4, having enough cash.
Yes, the classic cash flow paradox. So many businesses are profitable on paper, but go bust because they run out of actual cash.
Right. Joe sells a huge order to a restaurant on day 1, so he books a big profit.
But the restaurant doesn't pay him for 60 days. And in the meantime, Joe has to pay for fuel and pay his staff today. That gap can kill a business.
So this section taught you how to manage that.
It gave worked examples of cash flow and, crucially, showed you how to calculate your working capital needs.
Could you just break down working capital for us?
Sure. In simple terms, it's the cash buffer you need to survive those gaps. It's the money you need to run the day-to-day operations while you're waiting for your customers to pay you. The software made sure you knew exactly how big that buffer needed to be.
That's a very sophisticated concept to be teaching an amateur on an Amstrad.
It is, and it gets even more so with Pillar 5, Value-Added Tax, or VAT.
So they were teaching regulatory compliance, not just finance theory.
Astonishing for a cheap home package, wasn't it? It explained how VAT worked, the basics of corporation tax, income tax. It meant you were planning for your tax bill from day one, not getting a nasty surprise at the end of the year.
And the final pillar.
Balance sheet display. This was the final step of the tutorial. It was the now you do it moment, showing you how to take everything you learned from Joe and apply it by entering your own starting figures.
So when you bring it all together, the value is just immense. It forced you to do all this manual foundational work on paper first. The computer wasn't there to create your plan.
No. It was there to synthesize and validate the plan you had already rigorously built yourself. The software's role was enforcement as much as it was calculation.
Okay, so after all that, the manual, the philosophy, Joe the Lobster Seller, you're finally ready for the application itself. And Triptych gave you 2 different versions to choose from.
They did. You had the single product version and a multiple product version.
Single product sounds perfect for Joe.
It was. It was for businesses focused on one core item, and the benefit was detail. You could get really granular with raw material costs, production times, all that stuff.
And the multiple product version. Let's say Joe starts selling crabs and oysters, too.
Exactly. It let you model up to 10 different products. But there was a trade-off. To manage that complexity, you had to enter your costs as a simple percentage of the selling price. It's a standard simplification, but you lose some of that granularity.
And the interface itself, on these old 8-bit machines, it must have been pretty basic.
It was functional. Question on the left, space for the answer on the right, and crucially, a little 2-line window at the bottom with handy hints to guide you. For the time, it was actually quite intuitive.
So you start it up. What's the first thing it asks for?
The basics. Company name, and then the legal structure: sole trader, partnership, or limited company. That was important because it affected how the program would calculate tax later on. And this is where the reviewer hit his first little snag. A moment of friction.
The fixed assets and the payment quirk.
That's it. The program needed to know about your big assets, buildings, equipment, and how you paid for them. The reviewer logically assumed that if he bought something with a single check, there'd be a single payment option.
But there wasn't one.
He couldn't find it. He was convinced the program just couldn't handle it.
So what was the deal?
It turned out the option was there, but it was hidden under a really obscure heading. Irregular payments.
Irregular payments. That makes no sense.
It's a perfect example of programmer logic versus user logic, isn't it? The programmer must have thought, well, if it's not monthly or quarterly, it must be irregular. It shows that even with a great manual, there was still a learning curve.
Okay, so once you figured that out, it moved on to expenses. And this is where the detail really ramped up.
Oh, massively. You weren't just typing in rent, 500 pounds. For every single expense item, rent, heat, salaries, you had to specify 4 separate things.
4, what were they?
1, paid by cash or credit. 2, is VAT payable on it. 3, how often are you invoiced, monthly, quarterly. And 4, when exactly will that first invoice arrive?
Wow, that is demanding. But I can see why. That's essential for accurate cash flow, right?
Absolutely. If your big insurance bill only comes once a year in March, the system needs to know to budget for a huge cash outflow in that specific month. It forces you to track when money's actually due to leave your account.
And it was during this very detailed data entry that the reviewer hit a much more anxiety-inducing problem.
Yes, the dreaded Amstrad garbage collection quirk.
The machine just gives up.
Pretty much. He'd be deep in an input session and the whole thing would just freeze. Screen solid, keyboard dead. For 20 or 30 seconds.
20 or 30 seconds is an eternity when you think you've just lost 10 minutes of work. I would have hit the reset button.
That was the natural instinct. But it wasn't a crash. Triptych confirmed it was a known funny quirk of the Amstrad. The machine was literally pausing to have a think. to clean up its memory.
So the software was almost too powerful for the hardware it was running on.
In a way, yes. This kind of financial modeling is memory intensive, and the Amstrads architecture just struggled to keep up gracefully. Triptych said it didn't happen on the other machines, just the Amstrad.
It's another layer of enforced discipline, isn't it? You had to learn patience and trust the machine not to die on you.
And to help with that, Triptych provided a brilliant analog solution to this digital problem.
The pre-printed data entry forms in the manual.
Exactly. They actively encourage you to photocopy those forms and fill out everything by hand before you even turn the computer on.
So you had all your numbers, all your dates, all your VAT statuses all lined up and ready to go.
It reinforced that idea that the computer is a tool for synthesis, not a place for messy first drafts. The quality of the output was totally dependent on the quality of your manual preparation.
Okay, so the hard work is done. You've been honest, you've gathered the data, you've survived the Amstrad's little naps. Now the program starts to give you the answers.
It does. And the first thing it does is a really practical inventory check. Stock levels. It looks at your raw materials and your sales forecasts.
And it tells you if you're going to run out of lobsters.
Basically, yes. It runs a month-by-month simulation and flags if you're projected to run out of stock at any point, which is a critical real-world alert. It forces you to go back and revise your purchasing or your production plan.
After that, you get the break-even analysis, a clear visual comparison of your costs versus your projected sales.
It's that immediate gut check. Are my targets even realistic? Can this thing actually make money?
But the real health check is the cash flow display, isn't it? That month-by-month breakdown of cash in, cash out.
That's the one. And this had a really sophisticated detail that confused the reviewer at first. The final month's closing balance never seemed to add up correctly. It invariably didn't balance with the final profit figure.
Why was that?
It was because the system was automatically factoring in your year-end tax payments, corporation tax, income tax, all the money you'd owe the government.
Wow. So it wasn't just showing you your profit, it was showing you your profit after you'd paid your taxes and forcing you to have the cash ready for that bill.
It was a brutal but brilliant reality check. It gave you a true picture of the total amount of finance you'd need to survive the full year.
And then finally, it generates the official documents.
The year-end accounts, your final profit and loss account, and the projected year-end balance sheet. The full picture.
Now, before we get to the stress test, the reviewer did have one mild criticism about the interface.
Yes, the UI clarity. He noted that sometimes figures would just appear on screen without clear headings, so you weren't always sure if you were looking at pounds sterling or, units of lobsters.
A consequence of the limited screen space on those old machines, I suppose.
Absolutely. They had to prioritize getting the numbers on screen over making the presentation perfect. It was another case where you really had to rely on the manual to interpret what you were seeing.
Okay, but let's get to the main event. The feature that turns this from a simple accounting package into a proper strategic tool. The sensitivity analysis.
The what-if machine. This, for me, is the most valuable part of the entire package.
Which do?
It stress tests your business model. It takes 5 core variables, sales, costs, wages, expenses, and depreciation, and shows you what happens to your profit if each one changes by plus or minus 10%.
Why is that so powerful?
Because it instantly reveals the Achilles heel of your business. It shows you where you're most fragile. If a tiny 10% change in one area causes a massive swing in your profit, you know exactly where you need to focus all your attention.
And the example from the reviewer's test company, Bright Enterprises, is it's jaw-dropping.
It is. The software calculated that a modest 10% increase in wages
would lead to wait, let me get this right, a 1,314% fall in profits.
a 1,314% fall. Yeah.
How is that even possible?
It's a classic case of high operating leverage. It means the business had very high fixed costs. In this case, labor relative to its profit margin. The margin was so razor thin that even a small increase in that fixed cost just completely wiped out the profit and then some. It was amplified exponentially.
So that one number is basically screaming at you. Your business is incredibly fragile. You have zero room for error on wages.
That's exactly what it's saying. It's a profound dose of reality delivered by a simple calculation. And the analysis didn't stop there. It also gave you efficiency ratios, debtor and creditor days. All the things a real investor would want to see.
Now, the reviewer noted that once you have all this, it's very easy to just sit there all evening, playing around with figures, tweaking a number here, rerunning the analysis there.
And this is where we get to the final critical warning from the reviewer. The warning on tinkering. He said that while it's fun, it can be quite dangerous.
Dangerous. How? You're just running simulations.
It goes right back to that core principle from the manual. Have you been honest?
Ah.
If your original numbers were based on real research, that model is your best guess at reality. The moment you start tweaking, oh, I'll just nudge sales up by 10% to make the profit look better, you are deliberately introducing a distortion. You're modeling a fantasy.
And the danger is that you start to believe the fantasy.
Precisely. You build your real-world strategy around a projection that, deep down isn't true. The software gives you the power to fool yourself. And Triptych knew that. The whole system forces you to confront that choice. Are you using this tool to find the truth, or just to confirm what you want to believe?
So bringing it all together, what was the final verdict on Entrepreneur?
Overwhelmingly positive. The reviewer, Peter Bright, said, and I'll quote again, "I was very impressed with Entrepreneur. Refreshingly different." He said it was a world away from the usual junk that wasn't worth the tape it was recorded on.
And the real achievement, the real value, wasn't in the computer program itself, but in the manual that came with it.
That was the key. The manual didn't just tell you which buttons to press. It forced you to think hard about your business.
And the most important part was accessibility. This wasn't some £1,000 corporate software. This was available on a Sinclair QL, starting at just £15.
The reviewer's final line sums it all up. The back of an envelope planning brigade have no excuse now.
They really didn't. Triptych put the tools for serious, rigorous self-assessment directly into the hands of the ordinary home user.
It was a remarkable achievement.
Which brings us to our final thought for you, the listener. We've seen how this 1985 software used its manual and its brutal sensitivity analysis to enforce honesty. It forced you to confront that terrifying 1,314% profit drop.
But then you have this little cartoon caption in the original review. It shows two couples at a party,
Yeah.
and one says to the other, "We can't complain. Computer fraud's been good to us."
Which makes you think, if this simple 1985 tool made it so hard to be dishonest without it being blindingly obvious, what about the complex proprietary financial modeling tools used by huge corporations today?
Exactly. With all their layers of abstraction and their black box algorithms, do those modern systems make it easier or harder for someone to quietly fudge an input, to introduce a deliberate distortion that isn't so easy to spot?
Do we still have a mechanism, whether it's digital or just a culture of integrity, that forces the people at the top to stop and ask, have you been honest before they publish the year-end projections?
It's something to think about, isn't it? The next time you see a corporate forecast that looks just a little bit too good to be true,